Hello, everyone. My name is Jennifer Ramirez, and I am the founder and executive director of the nonprofit organization called And Rise. At And Rise, we empower women to be the ultimate versions of themselves, both personally and professionally. As part of professional development, we also believe that being financially responsible is important, especially for business owners. Today, we will be talking about the fundamentals of running your business and understanding how cash flows and works. I'm very excited to introduce you to small business advisor, Maura Vella, who will be presenting on Cashflow 101. Welcome, Maura.
Thank you, Jennifer. I'm so happy to be here with you today.
Yeah, thank you for joining us. I really appreciate you being here. And why don't you just tell everybody quickly a little bit about yourself and what you do?
Awesome. Yeah. So today I'm going to talk to you about the nitty-gritty of running and operating your business. This planning is really going to give you the tools and the knowledge to help you navigate your business so that you really can not just survive, but really thrive. And I understand, I was in this place a while ago, that many of us hear financials and our eyes automatically glaze over, or we stop listening because we feel like it's a big black hole of unknowns, and we don't even know where to start. So really today, my goal here is to break it down slightly and share the importance of why it's essential, it's imperative that you know how to plan out your cash flow and really learn about financials as a small business owner. So who am I and how can I relate? I'm speaking to you as a small business owner myself. I have three boutique fitness studios in Chicago, and I've been involved for the past over 10 years. And I'm also coming to you as a mother of three. I've got three little ones. And in addition, I am a small business advisor. So showing you more about how and why you need to plan out your financials is really the best advice that I can give you in this short amount of time. I want you to get at least one or two nuggets of information that will not only directly impact the health of your business, but also put you in a really healthy mindset. I think that is super important as a small business owner. A lot of us get into small businesses because we are passionate about the craft or the service that we're providing. But to get that right mindset of running the business is really, really, really important. So that's my goal for you today as we chat a little bit more about this. All right, so without further ado, I'm going to share my screen. Okay, so Cash Flow 101 with Maura Vella, that's me, and we'll go forward. So some financial fundamentals, that's kind of what we're going to go into first. I would like to talk to you about these fundamentals. And bear with me for 1 second. So fundamentals, this is kind of the first basic thing that we need to go over. Revenue is all of the sales. The top line is always what you're bringing into your business. Next is the cost of goods sold. So these are the expenses that exist in order to deliver the product or your service. The cost of goods sold, for instance, would be like the materials or in some cases, the people. If you don't have the revenue, then you wouldn't need these cost of goods sold, or in other countries, they call it cost of sales, to provide the business. So this equals your gross margin. And that's where we then get into overhead expenses. And the overhead expenses are those fixed expenses that are going to exist no matter what. So those of us that have a brick and mortar business, you have your rent, you have your utilities, you have all of the things that no matter what, if you're bringing in money, sales are going to be taken away at the bottom. And then at the end, you get your net profit or your net margin, which is your profit. So those are kind of the essentials that you need to know about financials. So I'm going to provide a little exercise with a lemonade stand. This speaks my language, and it made it really easy for me to understand some of these fundamentals. So the situation is you've got this lemonade stand. We're open 240 days a year, and we're open 6 hours a day. So doing the calculation, that gives you 1,440 hours per year. On average, you sell 19 cups in an hour. Okay, so if we multiply 19 times 1,440 hours, this gives you a whopping 27,360 cups of lemonade per year. Simple math here to kind of figure this out. Now, the average transaction, let's get a little bit trickier. Small is $2, medium is $3.50, and a large is $4. So on average, if we take the average of $2, $3.50, and $4, you get $3.16. We're going to keep it really high level. And the average by allocation, this gets a little bit more granular, is a weighted value. So if we're saying that, let's say, 45% of your customers buy the small, and you can see that below here. And then the 35% buy a medium, that's a $3.50 version, and 20% buy the large. The weighted value of all of this combined is going to give you $80,000. That's our top line. That's our revenue for the year.
It's a great lemonade
All
stand.
right. What's that?
It's a great lemonade stand.
Yeah, right. I mean, I wouldn't mind going into this business myself. Okay, so the revenue, that top line is 80,000 and change. Now we get into the cost of the goods sold. Now remember, cost of goods sold is that variable expense. Sometimes it's called variable expenses because it changes depending on how much you're selling. So the costs that are attributable to the revenue and the sale are the cups, the ice, the sugar, and the lemons. And so it's all broken down here. Cups, well, if we're going to sell 27,360 cups of lemonade at 4 cents per cup, we're going to figure out what that is. Ice, we got to have cold lemonade. Nothing worse than warm lemonade, right? So 200 cups per bag. We do the math, and it ends up being at $2.25 for 136 bags of ice. The sugar, all of these pieces, we run into the puzzle, into this equation, lemons, and then of course you can't forget the credit card fees because most of us are not paying in cash anymore. And so those fees add up. 2.9% we're figuring out that of 75% of our transactions. When we do all of the math and figure it out, we get to $30,247. That just comes right off. Like, you're not getting $80,000 of revenue. You're getting really 80,000 minus this 30,000 because you have to pay for all of the materials to produce your sales. So we call that the cost of goods sold. That is 37.8%. Now, depending on your business, that can be great, that can be poor. It's hard to say a definite, like, your cost of goods sold should be a certain amount. It always changes depending on that industry that you're in. So, revenue 80,000, cost of goods sold 30,000. Now we get into those fixed expenses, and those are the expenses, like we said before, that are really, it doesn't matter if you're making a sale or not, you gotta have it in order to run this lemonade stand. So the stand, the jugs, the baskets, the license, the labor, okay? Labor, 720 hours a day of 1440 by employee, plus taxes for your employees. We got to pay taxes on top of our employees. Or in some cases, you might have an independent contractor where you don't pay those taxes. Marketing. All of these things are baked into your fixed expenses. When we do the math, you end up with $20,748 for those fixed expenses. Now, this also means if you sell zero, you know, let's say we have a pandemic and we can't sell any lemonade. Well, you're still on the hook for that $20,748 for the year, or broken down by the month. So that's kind of what we've had to figure out in the past 6 months with the pandemic, with some of the brick and mortars. That's a whole other topic that we can go into as well. But to keep this high level, now we've got our revenue, our cost of goods sold, our gross margin, and you can see that that's 62%. Again, depending on your industry, we have to kind of figure out what feels right for you. And then those fixed expenses. So the net margin, that profit at the end of the day, or literally at the end of the year, you're making $30,000. So Jennifer, you said, oh, that's a great lemonade stand, $80,000. But really, what you see is a little bit less than $30,000 at 36% margin. All of these factors you have to take into play when you're working on your business. So then part of the fundamentals is figuring out what is our widget and breaking it really down granular. Our widget is a cup of lemonade. We're going to make, on average, $2.93 on a cup of lemonade. Our cost of goods sold takes up $1.11. Our gross margin is $1.82. And this is kind of how we put it into a grand plan with goals. So this BEP is our break even. In order to break even with this entire model, with the gross, with the cost of goods sold, along with the fixed expenses, at the very minimum, well, the break even point is 11,400 cups over the year. And you can see at the bottom, this bottom line, the net margin, that's where you get zero. That's going to break even. You're not going to see a penny out of it because you have to put it all towards your expenses. Now, right now, we're at 27,360 cups. And you can see at the bottom that net margin shows a little less than $30,000. Not bad. Well, where are we going? And this is kind of where some of small business owners fail to project into the future. You got to have a goal. You've got to have a path in order to succeed. Don't just react to what's happening. Know your numbers, plan that goal, and then figure out how you get to that goal by breaking it down by the widget. So if we want to get to $40,000 or 40,000 cups, well, that's going to give us over $50,000 in profit. It's pretty good for a lemonade stand. So figuring all of this out, will I really be able to achieve this goal without raising my fixed expenses? That's another thing to take into account. Maybe we need more jugs. Maybe those fixed expenses go up. We all have to analyze it to make sense of what it is that we want and need. That was a big meatball there, or a big glass of lemonade. How do we use this lemonade stand and take it into kind of your business? Well, this is where the Cashflow Performa comes into play. So like we started with a lemonade stand, you start with a revenue. And so this exercise right here is actually a tool that I use. A lot of different businesses have their own tools, but something that I can help and provide to you. Bear with me for 1 second. So what is the revenue you need to go and create, to drive your business? What are those different revenue streams? You know, most of us, not all of us, but many of us, I would say, have different types of revenue streams. For instance, in my business, we have We have online sales right now. We also have in-studio sales. We have different types of sales. We've got retail, we've got service. There's my husband. There we go for for impromptu remote trading here. So listing all of those different revenue streams is really beneficial and helpful for you to kind of figure out which ones are profitable, which ones aren't profitable, which ones are feeders into the profitable ones. I like to list a few of them on there just to see what we're doing. So then this next section in the cash flow pro forma, that's a tongue twister, cash flow pro forma, tracks your cost of goods sold and your fixed expenses. So this section really gets tailored to specifically depending on those variable and fixed expenses unique to your business. And just reminder, cost of goods sold are those variable expenses that change depending on the amount of products or services that you actually provide. And those fixed expenses don't change. They are constant. Again, I'm drilling in. I want you to take away a few different nuggets of information. And as you can see in here, we bucket them into different items. You can talk to your bookkeeper or accountant. I think this makes it look easier, especially when, for instance, when there's a pandemic and you need to cut expenses, it's easier for you to take a look at the things, maybe the marketing goes down or maybe the marketing goes up. These are all different things that you need to think about when you're looking at the past and moving it forward into the future. So finally, what we're going to want to look at in this cash flow pro forma, because I want you to know that profit doesn't necessarily equal cash in the bank. And I think that sometimes we miss that. So there's other pieces to this overall cash flow puzzle. We want to look at any loan principles or maybe even grants or funding that you've received. Owner distributions that you take. You want to add all of these different things in so that we can really understand where your cash is going each month. And that's why, you know, the cash in your bank is what it is, and understanding what that is. Okay, so once we plug in all of these numbers, this tool will give us the cash on hand at the end of the month. And I can assure you that those businesses that are growing and scaling up are 100% most certainly looking forward with a tool like this. They're planning out their goals. They're figuring out what it is going to look like for the rest of 2020, hopefully into 2021 already. And I also want to assure you that the purpose of this tool isn't necessarily to be 100% accurate, but really just to learn what your trends are saying so you can make more educated decisions. The more you work with this tool, and it's not like you have to do this every day, first of all. You could do this, you know, once or twice a month, a chunk of time to really just look back, see what makes sense, and use that to move forward. So using your historicals to help you define that future path, you'll get more and more accurate as you look at it and go. And that's going to create the confidence that you need to grow your business. There's nothing worse, and I can assure you I've been in this position, there's nothing worse than going month by month and being like, I don't know what's going to happen this month. Fingers crossed, right? Those smart, savvy business owners in larger businesses and smaller businesses have this projection tool so they can figure out what it is. If they don't have the best month, what does that mean to their cash? Are they going to be able to pay their bills? Of course they're going to pay their bills because they're going to have cash in the bank because they've already prepared for this rainy day. So we use this information to make better projections into the future, and then we'll tweak and adjust along the way. All right, that was an even bigger meatball. So my final words of advice for you are, one, my first takeaway is, if you have no idea about anything that I just talked about, I want you to know It's okay. It's totally okay. This isn't a quick, it's not an easy skill to learn. I tried to break it down to make it kind of simple, but it's going to take time and probably some help. So my intention here is to, at the very least, really bring awareness to this important aspect of your business so that it's not just a hobby, it really is a business, and that you are feeling good. If you're providing a service, you're providing a product, there's an energy exchange, and you need to feel whole within what you are receiving back to make sure that you can continue to provide this awesome service or product to your customers in the future. So if you feel like don't even know where to begin to implement something like this, my ask for you today is that you must reach out to me so that we can work together to build something out at no cost. I am offering free advising sessions. I want to help see you take the path to move forward, because your customers, your clients, your everything really depend on you to enhance their lives. So my email is here. It's Maura@cultivateadvisors.com. Cultivate Advisors is an amazing, we are also a startup business, and we are all business owners in either former life or currently, like myself, and so we know what it's like to feel sometimes lonely as a business owner. So really my goal here is for you to just schedule an initial call with me, and we can start building this out. I'll learn a little bit more about you. I'll share more about me, how I work, and everybody will thrive. That's all I got.
Awesome. Thank you so much, Maura. I appreciate that. So again, you guys, if you're interested in doing a free session with Maura, you can reach her at Maura@cultivateadvisors.com. Yeah, thank you so much for being here and for sharing that information. I think that that's really important. And I think for most of us, it's scary to look at that and we automatically become overwhelmed, but it's definitely something that is a must when running a business. You have to know your numbers. You have to know what's going on in the back end. And there are expenses as well that people, I think, don't always take into consideration. Your MailChimp, your Gmail, things like that. Those are costs that you might not even think that you're, spending money on, but you are. So things to think about. Thank you again, Maura, for being here. And bye, guys. Thank you guys for watching. We'll